Nona Peltier.
Well, I don't have a 4-day week.
Every time it's in the Radio 1, you're on it.
This week was a 4-day week.
Yeah,
though,
that's because you're having your teeth.
Yeah.
Oh, yeah, okay. Now, well, I was going to talk about your teeth. You've had your teeth.
Yeah, but, I'm good with that. No.
Yeah, good.
No.
Fletcher Building, this is a big story, isn't it? Because they've been placed in a trading halt, right?
That's right.
Yet another warning, big losses in the construction division.
Yeah, so last October we heard about this financial year, 160 million. That's on top of the couple hundred million from the year before. And it's involving these two projects we've talked about, one in the Justice Precinct in Christchurch and then the International Convention Centre for Sky City up here in Auckland. And so for those two projects, the company's been running into cost overruns. They've said that those costs would be ongoing, and in October they said 160 million more this year. Now they're saying, well, it's going to cost them even more than that. They haven't said how much. But they've said that the expectation is that it's going to put them into a breach of their covenant with the bank. So that's their financial arrangements.
Gosh.
And that's quite serious. And so that means that the company's going to have to come up with some kind of a plan to address that, whether that's a capital raising, maybe a sale of assets, some kind of restructuring. And then, of course, they're going to have to answer to the investors, too. Like, come on, how are you going to return to a profitable construction division? What's the plan? So this is an opportunity for Fletcher to get it right, but it's also going to be difficult.
Yeah, it is. It's such a fascinating story, Fletcher Building, isn't it? Because they seemed on the face of it to have picked up so much work in Christchurch.
Yeah.
That the revenue situation must have been extraordinary, but just.
Well, we've seen this across the sector, though. The construction industry, you would have thought at boom times they would be doing great, but the costs have also scaled up, and their project costs, I guess, are fixed. I'm not exactly sure what the arrangements are. There's limited of how much disclosure there's been, but overall, you have to kind of think that the costs have really run away, and this labor shortage that we have is certainly not helping them.
Fascinating.
Yeah.
Stay tuned. Thanks, Nona. The Reserve Bank has held the official cash rate at 1.75%. There are the undescribed species on distant planets. Who knew this was going to happen, right?
Well, that was not a surprise, but they were a little bit more dovish, which means that they were, less sort of enthusiastic about interest rate rises, and they were so far in the distance, like 2020 we're talking about now, that they're just not on the horizon. And that's partly because in the short term, the Reserve Bank is thinking that economic growth won't be quite as strong as we thought, so maybe 3.3% instead of 3.5%. But later on, we're expecting economic growth to pick up. And even though there are inflation pressures externally, that's internationally, and there are, believe me.
What happened on Wall Street, and it was a response to interest rate rises in the US off the back of inflation pressures, right?
However, the bank still doesn't think that those are significant enough to move on interest rates. And so for now, you can expect really no change. Well, unless there's something really extraordinary that happens overseas. And I think we've seen quite a few extraordinary things so far, so I don't know about that. We're probably not going to see any change there for 2020. Never mind, though, the dollar did fall a little bit, just slightly, 71.9 US cents, and that's partly, again, because the US dollar is stronger. 92 Australian and 51.8 pence. The top 50 index. Now, that's interesting. It fell nearly 0.2%. That's not a big fall. We're talking 18 points. That's 1.8 to 8,177. So we've seen a recovery there too. But look, there's a lot of volatility out there. We're seeing it right through Asia. We'll expect to see more in Europe and, of course, Wall Street. So
we were talking about that last night. It's going to be a volatile period ahead.
Absolutely.
Everyone is speaking. Thanks, Nona. Lovely to have you back.